The best bitwala trading day strategy starts with preparation and discipline. Begin by analyzing the market conditions early in the morning. Check the Bitcoin and Ethereum charts, as these coins dominate liquidity on bitwala. Focus on identifying trends, key support and resistance levels, and price patterns. Look for moments when the market shows strong directional movement, as these are ideal for day trading. Once the market structure is clear, define your entry and exit points. Use limit orders to enter positions at strategic levels, minimizing slippage. Position sizing is crucial. Risk only a small percentage of your account per trade, typically 1 to 2%. Leverage should be avoided unless you have extensive experience, as bitwala supports margin trading but carries significant risk. During the trading day, monitor volatility spikes and price consolidations. Quick fluctuations often provide short-term profit opportunities, but require careful timing. Technical indicators like moving averages and RSI can guide entries and exits, but never rely solely on them. Observe the order book and recent trade history on bitwala to gauge market sentiment and confirm momentum. Risk management remains the cornerstone of this strategy. Always set stop-loss levels slightly below support or above resistance to protect capital. Take profit targets should be realistic and aligned with recent price swings. Avoid overtrading. Stick to setups that meet all your criteria. End-of-day analysis is essential. Review every trade, noting what worked and what didn't. Adjust your strategy based on patterns you consistently observe. Consistency, patience, and discipline separate successful bitwala day traders from those who lose. By combining technical analysis, strict risk management, and clear trading rules, this strategy maximizes potential profits while safeguarding your account, turning bitwala into a reliable platform for structured, informed day trading.